Hello traders, Gary Wagner here. It is approximately 11:30 in Honolulu, 5:30 in New York City. It is Monday, the 26th day of March 2012, and this is the Daily Report for Gold and Silver. In a lecture series to George Washington University students, Ben Bernanke today hinted or alluded at the possibility of a QE3. And the markets reacted in spades. As the market is closed now for the mid-morning break before Globex and Forex reopen in the afternoon sessions, we close substantially higher in the precious metals markets, up over $27 in gold, closing at $16.8921. As you can see, current print on the board, as I said, up about $27, 1.63%. Silver, also a strong showing, up about 60 cents on the day, up 1.86%. And as you can see, current print on the board, 32.80. Traders, the first chart that I do want to look at today is going to be a very, very short term. It is Henkin Ashi format. We're going to convert it before we end with this chart, but it's a 60-minute chart. Kitco's Jim Wyckoff is calling it the Bernanke boost. I thought that was a very, very interesting term. But you can see really the sheer magnitude of his power in terms of being able to say something and see a market react to it. Stock market up tremendously, gold up tremendously. But notice the size of these bars here. They're tremendously large. They're showing a vital, not only turnaround in the market, but a turnaround with some real momentum and real strength. And when we convert this to a candlestick chart, you can see how it really changes the data. But look at this 1 hour move. You've got in a 1 hour move the market moving from roughly 1658, call it, all the way up to about 1680. Short pause the next hour, then a boost, 2 hours of consolidation. 3 hours of new highs in the marketplace, closing just off of the highs and very, very near the highs. We have seen a tremendous move in the marketplace today. As I said, up about $27 on the day. Now, traders, we have a really nice position beginning to build. If you recall, we bought our first position a little bit high because we got in roughly at 58. And we were smart, or wise enough, I should say, to dollar cost average as this market came down last week, and we actually bought in right here at 1642, putting our average price at 1650. But more than it just being an average price, traders who took these calls have 100 ounces at 1642, another 100 ounces sitting at 1658. With the market substantially higher, it puts good profits in our hands. Now, a couple of things that I do want to look at in today's report. One is going to be our current wave count, and then secondly is going to be some projections as to what we can look at or look to achieve in this particular trade. Now, to do that, I'm using a shorter term chart. It's a 360 minute. It is in Henkin format. We can move it into anything, but I can say with some level of certainty at this point that we've ended this long corrective move, and we have now entered a new impulse phase, and that would be wave 3. And so that's going to look like something like this. Now, wave 3, if it reacts in the same way as wave 1 in terms of the distance and price move, should be a pretty sizable wave indeed. Now, realize if we are in fact correct, and if we are under the assumption that in Elliott wave theory, wave 3 cannot be the smallest of any of the three impulse waves. It certainly doesn't have to be the biggest, but it cannot be the smallest. Under those guidelines, then wave 1 should be a good benchmark in that what we should witness is at least a price move equal to that of wave 1. All I'm doing is using a scalable line. This is the price move that we saw in wave 1. I'm going to simply take it and fix it to the bottom or beginning of wave 3. And as you can see, and this lines up with what we were looking at last week, my belief and projection at this point is wave 3 should take us either just shy of or to about $1,900 per ounce. Now, is this going to be in one straight line? Well, first of all, absolutely not. What we would have to witness on something like this is probably going to be a 3 count. 1, 2, 3, 4, and 5. And in that, we will have 3 fairly strong rallies in the marketplace and 2 corrective phases in between those 2 points. And it should conclude, as I said, somewhere around 1,900 per ounce. Now, in terms of time parameter, one thing that I have been working with, and I talked about it a little bit in my Kitco article, and that is to use something that we haven't brought into the mix up till now, but that's Fibonacci time extensions. And traders, as you can see, I have entered or added the Fibonacci time extensions, and I want to spend a couple of moments and go over them with you. Really, on this time extension, what I've done is we've got 2 price points. This is our beginning point, or the beginning of this rally. This is at the end of 2011 in December. Market goes all the way up to about 1789, right in that area, 1793, and that would be 100%. So we have 0 to 100 on a Fibonacci time extension just based upon the rally. Now here's what's interesting. The first projection point is our 38% level, and what that has clearly shown us, if we look at this, is it has marked pretty close to the conclusion of the correction. So you can see that there is the distinct possibility that these extensions, the time extensions, are giving us some vital information. So we'll look to plot the various points, such as 161 and 200%, for particular moves within the market, whether it's the termination of the minor one found within this impulse wave number 3. But it's something that we are going to be bringing into the mix in the days and weeks to come. Lastly, I want to talk about silver for a little bit. Silver has made a terrific move here. You can see on our daily chart, basic candlestick format, we have an engulfing bullish. We have our confirming candle today. That is going to issue our buy trigger. So as the market reopens, if I see the variables continue, I will issue a special trade alert on silver this afternoon. In terms of the count, it's probably very, very similar to that of gold. However, in my count, just in straight Henkin format, what I've still got it is that we're probably at the beginning of a third wave. It seems to not only be lagging behind gold, but it performs in a very similar way to gold. So I'm looking this as our possible wave 3, and as we looked at it, we had our top in the marketplace, our A, our B, a long C, 1, 2, and as I said, my belief is that we're probably currently in wave 3. And once again, we will look to issue a trade alert this afternoon. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Tuesday for another daily update and review. Bye-bye.